I've seen this question come up many times before, and the funny part is that it comes up on different topics. So let me show you what question it is. It reads, Josh, are you still doing your DCA into China? Now it comes out on the China video, it comes out on the T-bills video, it comes out on the 20 best stocks video. Basically it comes out in almost every different genre of video that I do. Maybe even the CPF ones, so who knows. This portion of China DCA is something that I've mentioned in the previous video in depth also. So today I'd like to address that question once and for all. I'll show you a glimpse into my China portfolio. I'll share a few learning points that you can take away. And if you stay till the end, I have a special offer just for you. So if you're keen, continue watching on. Hi guys, welcome back. I understand the question on are you still DCAing into China quite a lot because this whole China investment part has been a hard journey. If you have also invested in China, you have been in red for a year or maybe more than that. I didn't invest at the top, I invested on hindsight now, somewhere in the middle, but the pain is still felt. In many ways, sometimes these questions want to look for confirmation biases, but avoid that. It shouldn't be the reason as to why you continue or discontinue your particular investment approach. But I think the learning points are still going to be universal for all. The key valuable points about doing a DCA is that firstly, it's automated, correct? It does not require you to put mental energy, emotional energy to it. You just set a system and automatically buy it. And if you expect an investment to be a year at least in terms of the buying, there are definitely going to be good news and there will definitely also be periods of bad news. But let me show you a glimpse into the portfolio itself. Over here, you'll see that I have two Chinese portfolios, correct? On the left is China 1K a week for 50 weeks. I set out that goal end of last year, 2021, to buy slowly into China. And thank goodness I decided to buy slowly. I did not expect this bear to be that long lasting. And as always, market is a great humiliator. I thought the bear had ended, that's why I created a second portfolio whereby I pumped in $2,000 for 10 weeks, and not just that, I further upped it with 3 times of $10,000. That's why you see that graph over there on the right looks a lot more lumpy. All in all, on the left hand side, the 1,000 per week consistent for 50 weeks is still ongoing, and you'll see that right now it has lost about 8,000 plus, which is minus 19%. On the right, the one which I kind of market timed a bit more, thinking that the Chinese bear was close, I accelerate the purchase. That portfolio now is in slightly worse shape. You see the cumulative losses are minus 11,000, which equates to a minus 23%. Bottoms are always like that. It looks like one until there's one more that's further lower, which means that was not the bottom, but that was just simply a bottom. But let's look back again at the China 1,000 per week for 50 weeks. You realize that at some periods it's finally turned positive, correct? That was somewhere in June 2022. And all in all, what I can share with you was, emotionally, it was a lot easier to handle. Doing this 50 weeks consistently for 1,000, I didn't even look at it too much. In fact, because it's buying so progressively and so slowly, this downturn for it really doesn't scare me that much. So as always, if you have a plan, stick to it. Or in the first place, if you don't even have a plan, formulate one. Because it's going to take out the emotional part of your investment journey. This is something I learned looking back at the days I invested through global financial crisis. A minus 23% drop is not scary actually. The most scary part is it takes 1 year or 2 years or even 3 years to find the bottom. That is the real scary part because that really sucks out the soul of any optimistic investor. That's why my big message to you today is start a plan if you haven't done so already. If you need a simple one, do a dollar cost averaging. Don't need to do lump sum. And that's something I've also advocated to my own private clients also. I've gotten them to commit to investing in 2023 regardless of what we see on the economic front. The key part is consistency, and so if you want a tutorial on dollar cost averaging, I'll leave it towards the end of this also. Now speaking to here, I have a unique offer to share with you. This video is sponsored by SYFE. And right now, SYFE actually has a new product called SYFE TRADE, and they can allow you to buy Singapore stocks. If you want to buy a Chinese ETF that's listed in Singapore, I have it for you. If you instead prefer Singapore blue chips only, I will also demonstrate it for you. Now, all views mentioned over here are solely for myself, and stocks mentioned are not recommendations for you to buy and sell. So if you're a current SYFE user already, you have a portfolio like what I do, you can simply toggle around and use the SYFE trade. Or if you're new to SYFE, then this offer applies to you. Simply sign up today with my referral code ASTUTEPARENT and you can actually get $70 worth of credits when you do a $2,000 top up and start your first trade. Now I've actually some details for you because I've actually done a Q&A with them already. The first question I have, are there minimums on trades or not? And as you can see over here, the minimum is just $1.98. This is about the lowest. Later I'll show some comparisons for you. Is there any dividend handling charge? Especially when you buy Singapore stocks, there's dividends, correct? And Singapore stocks are strong in giving you dividend income. So again, there are no dividend handling charges. And the third part is, what are the fees? So SYFE TRADE actually charges 0.06%, minimum value of $1.98. That is the lowest actually in the market, because if you see over here, Moomoo charges 0.03 for commission and 0.03 for platform, which in total is 0.06. But for Tiger, they also have commissions and platform. The minimum is also 0.06. So back to SYFE, you realize that the fee is about the most competitive in the market. The trading fee, clearing fee are applied to all brokerages anyway. So this is a much more cost-effective platform that you can use versus a traditional broker, which has a min charge usually of $10 at least. So before I show you some trades, let me smash on like button and press the subscribe, especially if you want to follow on with my China investment portfolio, or if you want to know more about Singapore stocks, because that is what I cover a lot on this channel. So for myself, I've actually done 2 trades already on the platform itself. The first is Lion Global HS Tech ETF. Now, if you want a particular ETF that focuses on China, I think this one could be a possible solution. It is broad-based, which means you don't only just buy Alibaba or Tencent. And the good part is it's denominated in SGD. Lion Global HS Tech ETF is one of the more liquid ones, and I've actually added it to my watch list. Simply click on the buy, and what I've done over here is to place a limit order, which means at this price, then the order would fill. The difference from buying an ETF and buying the SYFE China Growth portfolio, this one requires you to make the trade yourself, whereas the SYFE China portfolio is automated, whereby every week I'm sending 1,000 and it automatically purchases. But this one you can actually control the price that you want to enter, especially if you're buying individual stocks, which is the next part. Over here, I've put on a name that I'm sure you're also familiar with. In my opinion, it's one of the easiest to buy, especially if you go deep into the bear market. And you can sleep well because you do know that our local banks are sound. Sound in terms of the business operations are sound, and that in terms of the valuations, I think UOB is pretty decent. That's why I've actually had a previous video suggesting as to why I picked UOB as my top choice of our 3 local banks. And I'll leave that video also towards the end of this. So for UOB, I actually did a market order trade. You buy at whatever the market is offering right now. And with that purchase, you can see both of them sitting now in my current portfolio. The SYFE TRADE user interface is about the simplest there is, because I've compared across quite a few platforms already. There's no need to toggle around complicated steps to make a trade. It's a simple buy and sell button. So if you are looking to hold long term, simply buy and keep it within the platform itself. Again, there's no dividend handling charges. All dividends received will be parked simply in the SGD cash holdings that you have in the SYFE TRADE account. It's very easy to see where to convert currency or withdraw funds. And if you're looking on what to add to your shortlist, I've actually prepared certain names that I've actually covered on this channel. These are some dividend companies that I have in-depth research on, and if you like them, you can add them to your watch list too. But to make purchases, you do have to fund the account first. This is not contra trading. All custodian style brokerages require you to pre-fund the account first. And let me show you a quick snapshot just in case you're looking to try it right now today. Simply go with Pay Now, copy down the UEN number for SYFE, and input again your ID. Just in case you forget, there's always a 24/7 hotline to help you in your queries. I've deposited $10,000 and the reflection of it was almost instant into my account. So again, if you're new to SYFE, there's a great promotion right now. $70 as long as you create 2,000 Sing dollars into your account and make your first trade. As always, invest safe and check out these videos that I have. The first is a dollar cost averaging video tutorial. The second is actually UOB, why I actually do like it that much. And last but not least, how to do US stocks on SYFE TRADE. So if you're keen on either of these topics, check them out and I'll see you there too. Take care as always. Goodbye.